glycerin.
Hello traders, I hope you all had a good week in the markets, and it's good to be back making another video here on YouTube. So I've got something slightly different for you today. My last two videos were about mistakes you can make in the market, and this is going to be something that I use to help me trade oil, and something you can also now use to help you trade oil. And it's just a kind of very simple thing, but it's very, very effective, and it tends to repeat itself over and over again. And it's something that I use to help me time entries into oil. So it's not like a set strategy to get long or short. It's just something I use to time long entries during a bear market in oil. And it'll all become clear very soon. But before we start, I just want to tell you the difference between the two types of oil futures, because this is something that confuses some people. So what we're looking at here is a Brent crude oil chart, USD BRO on TradingView. And there's another type of oil you can trade, which is WTI crude oil or US oil on TradingView. Now, Brent and WTI, they're different types of oil. So WTI, or West Texas Instrument, is oil that's produced in the United States, kind of North America. And Brent crude oil is oil that's extracted from North Sea oil fields, so Northern Europe, UK, that sort of stuff. So they're two different types of oil in terms of their properties. But when we're looking at the charts, if you had a USD BRO chart and a US oil chart next to each other, you wouldn't be able to tell the difference between the two, aside from the fact that USD BRO is priced slightly lower than US oil. So right now, Brent is trading about $48 per barrel, and US oil is probably trading around $50 per barrel. So even though the charts will look the same, the prices will be shifted slightly. So the reason I'm telling you this is because what I'm about to show you works on both of these oil futures. It just depends on which one your broker allows you to trade. So if your broker lets you trade US oil, then of course use a US oil chart, not a USD BRO chart. Otherwise you'll confuse yourself with the pricing. But this works on both of these charts. So if you're looking at this chart now, they'll look pretty much the same. So now that's cleared up, let's look into the details and see what it is that I found. So I was analysing oil about a month ago, and I noticed something regarding the downtrend legs in oil. And I back tested this. I looked back in the past at previous price action, and it was something that repeated itself seemingly over and over again. So I thought that I would use this newfound knowledge to try and find a trade. I did so. I found a trade. I got long oil around $46 a barrel. I posted this on my Instagram, by the way, so hopefully some of you got in. I've had a few messages saying that some people are long also, which is great. So I wanted to wait until I actually took a trade using this knowledge before I posted this video. So right now I'm in a long trade on USD BRO, now trading around $48. I got in around 46. So I'm around almost 1 hour up so far, and my targets are around 52. We'll go over that later. But for now, I want to show you this thing that I found. So if we look at these down legs in oil, I kind of thought they looked very similar in length. So from the high to the low, they tended to look rather similar. So I thought that I would test this out by measuring the pip moves. So if we take the most recent down move from the high to the low, use our measurement tool, shift and click, and that comes at around 100 pips. So let's take the previous down leg from the high to the low, and it comes around almost exactly the same, 100 pips. So let's go back to this kind of high up here to the low, because there's all kind of one down move. It just ranged for a very long time. So from the high down to the low, comes in about 90 pips. So not quite 100, but 100, 100, 90. Let's take this high to the low, 100 pips. Let's take these highs to the low, 95, 96 pips. So 100, 100, 90, 100, 95. These are all coming in very, very similar. So let's look at high to low, 110 pips. High to low, 100 pips. Now, of course, these are only very small retracements on this leg here. It's only a very small retracement. But the point is that we're not just blindly entering entering long on a 100 pip down move. We'll go over later how I found the entry. I'm using this simply to time my entries. So let's keep going back and looking at more examples. So this, what's this, high to low, 100 pips. High to low, 100 pips. You see what's going on here. It tends to repeat itself over and over again. I'm not going to bother going too far back. This is a pretty hefty down move here, so I imagine that was just a bit of a tanker. Let's have a look though. 110 pips, 100 pips. So we're using this rule, kind of a 100 pip rule, to find possible entries long into the market. We're not just blindly entering on 100 pip down moves. So what we're going to do now is place the boxes on to make it a little bit more visually appealing. So if we place this box here, that's 100 pip box. Copy and paste this across, and 100 pips again. Copy and paste. And we'll just do this for some of the examples that I found. So that's around 100 pips. Just slightly less, about 90 I think that one was. Copy and paste again onto here. Look at that, perfect again, 100 pips. Onto here. About roughly 100 pips. There we are again. Where was the next one? Yeah. So I won't go back any further, we've looked at those already with the measurement tool, but 100, 100, 100, 100, 100, 100, 100. So that's pretty much all this is. It's very simple, but you can see it's rather effective. If we zoom out, we tend to find that crude oil, when it goes into its downtrend, its down legs, it tends to do so by around 100 pips roughly, before it finds small retracements, large retracements, or complete and utter reversals. This was actually a reversal. So how do I use this to actually trade the oil charts? So let's look at the most recent down move of 100 pips, and I'll show you exactly how I got long. So when we were down here, I kind of noticed this rule around here, so I waited for this leg, and we came down to exactly 100 pips, exactly the same as this move here. So I thought, right, I'm not just going to get long, I'm going to wait for an opportunity to get long. So I used this rule to, as a kind of alert for me to watch for higher prices and to try and get an entry long. So what I want to do is go down to a lower time frame. I'll keep that on. So if we go down to the 4-hour time frame, so this box is measuring that move. Let's make it a little bit more accurate. Bring it into that high and down to that low. So here we have this 100 pip move. The first thing I did, I always have my 50 EMA on the chart. So I had my 50 EMA, and I noticed that this 50 EMA was providing resistance and sort of providing a barrier for price. So price was trading below this 50 EMA for the entire time. It was trading above it here on the uptrend. It smashed below, came back up to retest, and then for the entirety of this down move, we were trading below the 50 EMA. So we were trading down here around the 100 pips. So I thought, okay, I'm going to get long once we break above this 50 EMA. But also, what else can I put on here? And you may have noticed it's a nice smooth downtrend. Oil tends to trend very smoothly, making it quite a nice pair to trade. So I can put a trend line onto here, and we can see we have 1, 2, 3, 4. We came up to reject it here again. Now, a lot of the time, if you were trading this, let's put another box on here. If you were trading this pair and you weren't really aware of this 100 pip phenomenon that seems to happen, you may have thought you were going to kind of sell previous support as resistance, or possibly another touch of the trend line. Now that would have been a valid trade, and the only thing that kept me out of doing that, these are very good kind of places to get short, as oil is trending in a certain way. Previous resistance, previous support acts very well in oil, as it does in most things. So you may have thought you wanted to get an entry short here, or an entry short here. There's a nice shooting star, or a nice rejection of the trend line. However, what kept me out was the fact that we had already made our 100 pip move. So I wanted to find an opportunity now possibly to get long. So what I did is I had my previous support term resistance that was broken. Then we had the next barrier to price was this trend line, and we broke above that trend line here, and then we broke above the 50 EMA. So this was my kind of signal to get long. Now the main premise for this trade was of course the 100 pip rule, and I didn't just blindly enter at the bottom. I instead added a trend line, added a 50 EMA, and thought, right, I'm going to use these to find an entry long. I want to have confirmation. I don't just want to blindly enter. So what I'm going to do now is put on my risk reward tool, and let me just find the exact entry points. 1 second. I have them written down. So my entry was at 46.37. I did post this on my Instagram story, so hopefully some people did get long. And like I was saying, I had some messages from people that did, which is great. So profit level at $52, around here. Stop, I wanted to be just below the 100 pips, so my stop level was at 43.90. So that saved me from any small kind of breaking below this kind of low here for some stop probing or whatever. But luckily we didn't get the stop probing, we just went straight up. So this is my current trade that I'm in right now, the one that I posted on Instagram, and I'm expecting this to rally possibly up to 52. But as we move upwards, I will be trading my stop behind lows. This isn't a significant enough low for me to trail my stop behind. I'll be looking at maybe a move back to retest the 50, and then a move higher, possibly a daily fib onto this. So I'll be holding this until 52s. If we do carry on going upwards, trading my stop below significant lows, below the 50 on the 4 hour, and yeah, just riding this up to 52 and seeing what happens. The reason I chose 52 is because I'm expecting this to be a little bit range bound. There's lots of things fundamentally going on with oil right now. I don't expect it to make any significant moves in either direction. So 52 is a safe bet. We have previous resistance, 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 and so on and so forth. It's quite a good area to take profits. And I'm possibly expecting another move short after this. We may even get it sooner, but as I said, I'm trading my stops, so I'm keeping myself safe from that. So it's a rather short video. It's kind of simple. 100 pips. We tend to find that crude oil, WTI, West Texas Instrument oil, moves in down legs of around 100 pips. And we can use this knowledge to help us time our entries, to find long opportunities. And I'm going to be doing a bit more kind of testing and seeing if I can find a similar type of rule for long legs, for the legs going upwards and the uptrends. But for now, hope you've enjoyed this. Hope you can use this to help you trade this pair, or either of these oil futures. And let me know what you think. Let me know if you use this in the future to help you out. And let's see how this trade goes. Those that are in with me, good luck. Let's hope this rides up to 52s. So thanks very much. It's been great, and look forward to seeing you in the next video. You can find more free content and details on my mentorship program on my website at www.rubenblameyfx.com. Drop me an email, rb.fx@outlook.com, any questions, or drop me a DM, Instagram at rubenblameyfx.